Hello and welcome to our exclusive webinar on Diwali picks, Samvat 2077. I am Devarsh Vakil. I am Deputy Head at Retail Research at HDFC Securities. And all the viewers of this webinar, all our patrons, customers, colleagues, friends watching this webinar, I wish you all a very happy Diwali. Diwali is the festival of lights where we celebrate the victory of light over the darkness, victory of knowledge over the ignorance, and victory of good over the evil. So I wish all of you that you have a fantastic new Samvat 2077. So our agenda for the day is that we are going to review the performance of Samvat 2076. It is important to take stock. So we will see what are the hits and misses. We'll also review the performance of our last year's Diwali picks, what went right, what went wrong, what are the sectors that are likely to outperform the markets, and also we will see our Diwali picks for 2077. So this is our broad agenda. Finally, it is important to also discuss about these stocks in detail. So we will do, we'll spend a couple of minutes on each of our Diwali picks. So let's start. Let's review the performance of the market from this Diwali to next Diwali. So as you can see from the table on the screen, as such, if you just see on the surface, it looks like that Sensex and Nifty had a mild Prozac year, about 5% gain. Mid cap and small cap had a 6% and 14% gain. But this table is actually hides more than it reveals. There was a lot of under the surface, there was a lot of chaos this year. And if you were to, we will analyze this year in detail, and there you will see that it has been a tumultuous year. It has been a tremendous year for the markets. Sectorally also, we will see that sector-wise, healthcare is the sector which has done quite well. It has risen almost 50% over the last year. IT did equally well with 47% gain, while other sectors like PSU and others, they have underperformed the markets. So if you were to go into detail, it has been a roller coaster ride. Earlier, starting from the last Diwali, we saw that the markets actually were gaining until January. Markets made a high, stocks were cruising ahead. Realty sector was up 23%, metal was about 19%, IT was also doing well. Average gain of NSE 500 stocks was about 13% from Diwali to January high. And then from mid-January in February, Corona pandemic hit the world. From February mid, market started falling and many stocks already made a high in January. From January high till the markets made a low, average NSE 500 stock fell 46%. These are the stocks, average 500 big stocks, they fell 46%. In markets, we have about 2,500 to 3,000 stocks traded on any day. Those stocks fell even higher. So market had a very bad 2 months from February and March. Sectors like banks, because of the moratorium on interest payment, they were the hardest hit. It took the banking and financial stock took it on the chin. They went down by 52%. Real estate was also one of the badly hit sector because of the Corona pandemic. It was one of the worst performance, going down by 49%. Pharmaceuticals and FMCG were the least affected sectors, as you can see, because of the daily essential items continue to be consumed. So FMCG stocks did not have that much effect of the Corona pandemic, and pharmaceuticals, for all the obvious reasons, the heightened awareness about the wellness, the requirement of medicine. Because of all this, the perception about the sector went a sea change, and that was one of the least affected sectors. And from those darkness of the March lows, from those very bad sessions in first few sessions of March, there emerged a new bull market. The bull market started from those March lows, and it is continuing till date. We see that the average NSE 500 stocks have gone up 500. Average NSE 500 stocks have gone up by 95% in this rally. You can see that the one of the sectors which has done well was IT. They have IT stocks on average has gone up by 99%, almost doubled from March lows. We see that the pharmaceuticals have also done well. Incidentally, pharmaceutical is the only sector in where we have come out with a thematic report last year, and our peak of that sector did quite well. It was one of the least affected, as you can see here, and while market started gaining, it has given a good returns. So our faith on pharmaceutical sector paid off last year, and it has done quite well. Automobiles also were one of the large sectors to do well from the March lows. PSU banks and FMCG were the least gainers. PSU stocks have gained only 15%, and FMCG has gained only 35% compared to 19 to 80% gain in other sectors. So that is the review. Earlier, first few months from December, from Diwali to January, market did well. And Corona-related sell-off was there in the market, and then we see a gradual recovery. So what are the lessons which we can take from this Samvat 2076? What can we learn from this? The first and important lesson to be learned from 2076 is to be contrarian. When everybody is worried about markets, when prices are really attractive, it pays to be contrarian. If you go out and ignore the near-term challenges and buy those stocks, then it has eventually given you a lot of returns. The one more important lesson to be learned from this Samvat 2076 is to be that quality stocks matter. When you see the fall and then subsequent rise, you saw that the larger, better quality stocks did fell less, and they, while coming back, they have gained the most. So rather than betting on turnaround, betting on sectors where there are a lot of pain points, it is important to remain with the quality. Third important lesson is that you obviously should time your market entry, but while buying, it is okay to take time. It is okay to gradually accumulate stocks. But when it comes to exit, it is important to take a timely exit on your trading positions. It is important to, from time to time, keep taking some profit and raise cash into the markets, into your portfolio, so that when some unknown factors hit the markets and stock prices fell precipitously, you have cash to deploy, and that cash can come in handy. You don't need to go out and try to find new multi-baggers. When opportunity comes, you can grab it, and those opportunities will give tremendous returns to your portfolio. As you can see from the screen, Aarti Drugs, Laurus Lab, Tata Communication, Birlasoft. Incidentally, stocks like Laurus Lab, Tatacom, and Birlasoft were covered by HDFC Securities in past. We have covered such stocks. So on March lows, if you had cash and if you knew about this company, you could have entered this, and these well-known large names could have given you multi-bagger returns. So these are the important lessons to be learned from Samvat 2076, that it pays to be contrarian, quality matters, take time to enter the stock, accumulate good quality stocks, but also from time to time keep booking profits and raise some cash. That cash can be deployed when there is panic in the markets. Now let us review how did our recommendations did. What are the top 2 hits and misses for us? As many of you know and many of you have invested, APL Apollo has been one of the best performing stocks for us this year. We first recommended it in 23rd December as one of the pick of the weeks, and it was around 1630. We came out with a report and gave a target of 1860 and 2066. We wanted to ask our investors to invest in stock because we expected that the company will do well on back of its leadership in steel pipe business, its diversified product portfolio, and its distribution network. Our thesis actually proved correct, and the company went on to perform even better than our expectation, beyond our expectations. It achieved our second target by January, and it yielded about 26% return to our investors in about 1 month. In fact, we again this year recommended APL Apollo in month of July at around 1700 price with the target of 2029. About 18% return was again gained in less than 2 weeks. So APL Apollo, our recommendation 2 times we have recommended this year and it has done well. It continues to do well. It has almost doubled from our first recommendation last year. Now it is trading around 2200, 3200 levels. So APL Apollo is our first hit. Second hit for the year for us was Midani, the Mishra Dhatu, Government of India Mini Ratna PSU. They work mainly in defense and aerospace for ISRO. We know that it is the only manufacturer of titanium alloys in India, and with its strong balance sheet and return ratios, we recommended it around 150 levels in December. We knew that the company had a robust order book of 2.5 times its revenue, and it was improving. The financial performance was improving. The quarterly results which were announced after our recommendations was much beyond our recommendation, and stock hit our targets, and it went on to surge to 278 in February. So APL and Apollo and Midani are two of our top picks. The one of the stocks which we recommended and hit our red flag was the Birlasoft. Birlasoft, because it has US as a region in which contributes about 75% of its revenue, and subsequently when the COVID-19 hit, it got hammered, and many of its on-site projects could not be attended to, and that's why hit our red flag level. So as we keep reminding our investors that those who are risk averse need to exit the stock when it hits our red flag level. Many investors continue to hold on to that stock, and our actual thesis did play out after that. It went on to not only recover the price, but it is now trading almost 2.5 times our recommended level. So the thesis eventually played out, but in intermediate, our timing was wrong. Our pick was right, and that's why it was one of our misses. One more miss which we would like to share is the Narayana Rudalaya. We recommended it when it in January 2018 they have acquired a company, a hospital in Cayman Island, and it was turning around. Soon after we recommended it, they announced a temporary suspension of that operations, and that's why stock along with the COVID-19 outbreak sold off and hit our stop loss level. So these are the two misses for us. The Bsoft and Narayana Rudalaya, APL Apollo and Midani are our top hits for the last year. Now let's see how we did on our Samvat 2076 Diwali picks. It is important to review the performance of last year before we start taking stock of the new Diwali picks. So as you can see that we had recommended about 12 stocks last year, and many of them did fantastically well. On an average, compared to 4% gain in broader indices, on an average, our picks have given 13% return. Two of the picks, Ultratech Cement and Bajaj Auto, the two large cap stocks, hit our stop loss levels of red flag levels, and that's why we have taken as a negative returns here. Other stocks went on to achieve their targets before hitting the stop loss, so all of them have given handsome returns to investors. And if you were to hold on to those stocks on an average compared to 7% gain on the highs in Nifty, our stocks have done fantastically well. Some stocks have gone up 160%, 170%, even 200%, and that's why on average they have gone up by 75%, compared to 7% on highs returns. So as you can see, the last year's Diwali pick did fantastically well, much more than the almost 10 times than the average return given by the Nifty stocks. So that is the performance review of our last year's pick. Now let's see what are the important sectors to be in 2077. These are the whatever I have spoken is about history, the things which have already happened. Now many of you are interested in what is the outlook for 2077 Samvat. So without wasting time, I'll get into our outlook for next Samvat. First, there is a euphoria in US markets. Mr. Biden is expected to win. Officially, the announcement will come. So now, uh, the US stock markets is going through a euphoria phase. Mr. Biden is expected to win the White House and take control of the White House by end of January. Democrats will continue to control the House of Representatives, and Republican parties are expected forecasted to retain control of the Senate. So basically, there will be a split in Washington. The investors are hopeful that this split in Washington would likely to thwart the major tax increases. The Democratic agenda was that they will, once come to power, they may increase the taxes. They will uh, put some restriction on social media companies, and large companies like Amazon.com and Netflix and other companies may face some uh, regulatory issues. But since the government is divided between two parties, those aggressive agenda will be difficult to implement, and uh, market is cheering that, market is cheerful. We expect that this rally will continue till end mid November to end of this November, but we expect a correction into markets at the end of the year, calendar year, the in the month of December. Because of the recent rise and euphoria, there is likely to be some correction. uh, it also will coincide with the calendar year and selling by the investors, tax selling. So we expect that the market will boom now, but at the end of this calendar year, there should be some correction. After the correction, in the second half of the uh, uh, this Samvat and in the first half of 2021, we expect again market to do well and surpass its previous highs. So now, what are the sectors which one should look out for in Samvat 2077? As we have learned a lesson to be a contrarian, we have we have seen that the one of the sectors which has done poorly is the PSU sectors, and that's where we are making a contrarian call. uh, it's not just a call contrarian call for the sake of being contrarian. PSU have been a most underperforming sector. The stocks are available quite cheap, and we see that there is a policy DIPAM policy change is happening. Till now, the problem with the PSU stocks was that the value was being destructed by the wrong government policies of coming to coming to market with small tranches of OFS. This piecemeal selling to ETFs was increasing the supply in the market, and that's why many of the stocks, despite being quite attractive on their valuation, was not able to rise. Now there is some change of heart at DIPAM. There is a change of policy, and now they are likely to focus on buybacks and likely to focus generating resources from this PSU stocks with the help of dividends. They are also looking to in strategically divest some private companies. Privatization is also on the agenda. And if this policy change, which is too much to ask, but if we are anticipating that if there is a policy change like this, then PSU stocks can continue to uh, uh, can change the gear. They will become from gross underperformer to one of the performers in 2077. So we urge all investors to keep an eye on these PSU stocks and add good PSU stocks on decline in your portfolio. One more sector which we are continue to do well is likely to do well is the private sector banks. There we continue to keep our faith. One more sectors, because of the policies of new Biden administration, we expect dollar to weaken and commodities to start doing well. Metals have started performing, and we expect these metal stocks to outperform other sectors in uh, somewhat 2077. We feel that it will be IT and pharma will continue to do well. They are going to be a major part of many investors' portfolio, and we would like to uh, continue our market weight stance on it. But we feel that it would be difficult to replicate the 2076 returns in 2077 in IT and pharma. So they will continue to be a performer, but we don't expect them to be best performers in 2076. Now let's go to our picks for 2077. So this year we recommend 10 stocks, 5 large cap stocks and 5 mid cap stocks. These stocks have been chosen. These are blue chip stocks with liquidity, high liquidity, and we expect these companies to outperform the market over the next somewhat. Let's talk about each of these stocks in a brief. So for Bharti, the threat price competition from Reliance Jio and other regulatory and technological challenges are now abating, and we are now optimistic about its revenue and profitability trajectory. We feel that the investors can buy this stock around this price and average it at lower levels and expect a good return out of this company. Second pick is the Cadila Healthcare. As we know, Cadila is one of the leading pharmaceutical company in India, having the in all verticals like finished dosages. They are into generics, branded generics, special formulations, biosimilars, API, vaccine, animal healthcare. All these divisions are gradually now coming together, and it should grow in high single digit to low mid teens this year. The US generic price erosion is now gradually abating, and the strong pipeline this company has, it is likely to drive growth there. The near-term uncertainty about US FDA, it's at Moraiya plant, is an overhang, but we think that in this year, over the course of this year, once that overhang is over, stock will start performing and giving returns to investors. As you know, ICICI Bank is one of our top picks. We have been recommending it many times. We have done it as pick of the week, many times Diwali pick also. And we keep the faith. We think that the almost 11% CAGR in NIA and about 50% net profit in uh, growth, CAGR growth, 50% growth is expected over 20 to 22. And bank, with its recent stake sale and QIP and its capital uh, positioning is very strong. It's likely to improve. It is now well capitalized for growth ahead. And because of the government's policies about moratorium, the concerns about the losses on interest fund is also the thing of the past. So ICICI Bank and other private sector bank, we continue to keep faith on. ICICI Bank has also the other subsidiaries like ICICI Life Insurance, Lombard, the ICICI AMC company, housing finance companies, its foreign subsidiaries like UK and Canada, ICICI Banks, also the broking subsidiary ICICI Securities. All these companies do give a lot of some of the parts value to this company, and that's why we continue to keep our faith on uh, the ICICI Bank. The IT blue chip bellwether Infosys is also likely to do well. They have announced the buyback, so there is also a limited downside. The new Biden administration in UN and United States is likely to be a boon to these companies. There will not be any concerns about H-1B visas going forward, and that's why we expect that these companies are likely to garner newer business, and they will continue to perform. So that's why we have recommended Infosys as one of the picks. In large cap, last stock which we think is likely to do well is the largest alcoholic beverage company in India and second largest spirits company in the world by volume. The subsidiary of Diageo in India, the United Spirits, is our fifth large cap Diwali pick this time. The sector has been severely impacted because of the coronavirus pandemic. Many of the restrictions were there on coming out and consuming alcohol. Uh, government has also, many state government has put in a coronavirus tax, and that's why this sector has been underperforming lately. Now is the time, once the gradually we are seeing that the lockdown is being relaxed in most of the part of the country. The balance sheet cleanup is almost done, and now it is the time to this company to perform. We think that the increase in home consumption, the resumption of trade business, the festival season around, all these uh, factors is likely to increase the revenue and profits, and that's why we recommend uh, United Spirits as one of the our top 5 Diwali picks in large cap category. Now coming to mid cap categories, we have also here chosen 5 stocks. Again, these are the stocks where we feel that there is a possibility of superior revenue growth and profitability growth over the next fiscal year, next Samvat, and that's why we have chosen these stocks. By the way, all these stocks are under our coverage, and we have detailed reports on our website. So if any of the viewers are interested to dig deeper into these stocks, you can go to our website HDFC sec.com, and there you can find detailed report about these companies. Alembic Pharma, as many of you know, is the mid-cap pharmaceutical companies, and they have been doing quite well. The Their niche capabilities in various sectors like the oncology, injectables, and ophthalmology, dermatology. These are the sectors where this company is likely to do well over the next year, and that's why we have recommended Alembic Pharmaceuticals. Credit Access Grameen is a private equity-based NBFC company. They have recently raised money through QIP, and they have now have sufficient capital to grow this business. And earlier they had merged Madura Microfinance with them, and that's why they have now a lot of synergy benefits which will be exploited over the next somewhat. The uh, asset quality deterioration because of corona is now thing of the past, and we feel that in over the next year FY22 this company will the normalization will happen, and it will go back to its previous growth path. It is one of the high quality, cheaply attractive, valued NBFC company, and that's why we have recommended it. Gujarat Gas is also one of the oil and gas mid-cap companies which we have recommended this time. As you know, Gujarat Gas is also a largest city gas distribution company. They have 25 licenses across 41 states in 41 districts of 6 states and 1 union territory. They are mainly present in Gujarat, Maharashtra, Rajasthan, Haryana, Punjab, and MP and Dadra and Nagar Haveli. So these are the areas where they have captive base. They have about 24,000 kilometers of gas pipeline and about 400 CNG stations. They have recently also been bidding for new licenses. One of the areas of their business, Morbi, which is constitute about 70% of the total industrial volume. There, because of the heightened demand, there is a tremendous growth there. The Morbi ceramic players are getting huge orders from their customers, and that's why they are also likely to consume higher and higher gas, and that is going to play out for Gujarat Gas over the next somewhat. So that's why we have recommended uh, Gujarat Gas as one of our mid-cap picks. Mphasis has been one of the star performers in the mid-cap IT. The Blackstone Group has acquired the stake, and they have then recently won a lot of impressive deals. They have total contracts about $360 million in international business in last 1 quarter, and these new orders keep on coming, which is giving a lot of growth visibilities. The immigration issues and the visa issues are now likely to abate in new administration, and that's why we are recommending Mphasis as one of our mid-cap IT picks. Radico Khaitan is one of the Indian-made foreign liquor IMFL category business. They have healthy recovery post this pandemic we have seen. UP is there one of the big markets, and there they are seeing a huge growth. The central canteen has now decided not to sell the foreign liquors, and that's where this company can increase its business. So CSD business is one of the growth triggers for this company, and we expect this company to also continue to do well. So these are the, in brief, short about all these 10 companies, the rationale behind why we are recommending these 10 uh, stocks, 5 large cap and 5 mid cap. And these are the levels on your screen where you can invest when there is a correction in the market, as I expected. If there is a correction, if there is a dip, you can average these stocks around these prices, and the various stocks are likely to return about 15 to 20% over the next year. Apart from these 10 fundamental picks, as you can see on your screen, we have also recommended 4 technical picks for this Diwali: Amar Raja Battery, Axis Bank, Sedate, and HPCL. This report was issued about few days back. Many of these stocks like HPCL and Axis Bank have started doing really well in last couple of sessions. Um, this report is also available on our website. If any of you are interested, you can go to our website and look at details about what are the various stop loss and targets for this 4 technical picks for our Samvat 2077. So friends, this is what I wanted to cover this in this webinar. We have been fortunate to come out with excellent recommendations last year. We have chosen 10 excellent mid cap and small cap stocks and 4 technical trading ideas for you. I hope all of you do invest and benefit out of these stocks, which are giving fantastic opportunity. To summarize, as I have pointed out about the markets, right now we are into euphoria phase. We think that this phase will continue in US markets, but post few sessions, US market, especially the Nasdaq market, is expected to run into some correction. And in the year end, there could be some correction. In that correction, you can accumulate these 10 stocks. And by the next Diwali, it is likely to give good returns, and it will improve your performance of your portfolio. That's all for the day. I wanted to cover all these things. I wish again all of you a fantastic Diwali ahead. All my friends, colleagues, viewers of this webinar, I hope you are all safe and continue to remain safe in this coronavirus pandemic related fears. As we see that the Diwali is the festival of light, I think the victory of human ingenuity over corona will happen in this Samvat. Victory of knowledge over this dark ignorant phase will go, and we will again be coming out on top next year. That is our sincere expectation. So thank you all for joining, and I hope you have a fantastic day ahead and a great Samvat ahead. Thank you all for joining. We can close the webinar now.